Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with a very special guest, a returning guest, someone we've looked to for brilliant cycle analysis. And we're going to be honing in today on Charles Nenner's research, Charles Nenner Research Center, charlesnenner.com. Said that, repeated your name a million times there, Charles. But we're going to be honing in on the 5,000 points on the Dow Jones. His cycle work is showing that the Dow Jones will go to 5,000 points. And of course, fundamentals seem to line up with that. But it's also in the face of trillions of dollars getting thrown at the system. So we're going to really unpack this today and dive into it. And I know he's ready. He's in Amsterdam right now, and we're looking forward to a great discussion. Charles, thanks for coming on the show with me today.
You're welcome.
In this current environment, why do you feel investors are so bullish on the stock market? Based on what?
According to me, based on nothing, but we have seen it before. We have seen it after the crash of 1929. The market made a huge recovery before then, going down and down and down. We had it in 73, 74. It happened in 2007, 2009, after the 2000 crash. So it's actually a normal behavior because of the slogan, buy low and sell high. Now, nobody really knows what is high and what is low, but it's compared to where it was, then it's low. And most people have not the insight to understand why they buy stocks. So right now, like I was in the dot-com bubble, there's no connection with the earnings at all. The earnings are going down and down and down, and the market goes up. And it's not going to end well for everybody.
Yeah. So in March, we had a record amount of people Googling COVID-19, coronavirus, and these searches almost perfectly actually correlated to the bottoming out of the stock market. So talking about, the Dow Jones going to 5,000, what's going to be the trigger? And is it going to be correlated to some sort of event that panics the heart of investors?
Well, for people who follow my research, we were in zero stocks 1 or 2 months before the market crashed. I had no idea why it crashed, but my indicators looked very bad for the economy, for the S&P earnings. And I don't think it has so much to do with the virus. It sounds strange because everybody becomes an expert in virus. But it says, we have to go to zero stock because this market is going to come down big. So it came down almost 40% before it bounces. So we still have a big problem in the economy, and that nobody watches because everybody thinks when we solve the virus situation, that's it, everything is solved. It's not. We still have an economy that it was weak before the virus. The interest rates were low, deflation was coming up, and it was a big mess, and all the insiders were selling. So one should not concentrate all the time on the virus. Now, the second thing is, if you look at how this virus develops and the other stories, starting with the Spanish flu, you're going to have a first wave, you're going to have a second wave, you're going to have a third wave. So my cycles actually show what the interpretation of the facts are. And the interpretation of the facts were that the virus is very bad. And then when the cycle bottomed, the interpretation is, well, we're going to find something that's going to get us out of the mess. And what you see happens in the North America, the US, South America, it's getting worse. Now, I heard Melbourne is on a lockdown, but the interpretation is still, it's not so bad. So once the cycles turn over, which they're doing now, then the interpretation is, well, maybe we're not going to find the vaccination and it's going to be a big problem. So we got out around 3,100 on the S&P, totally again, after the bounce. And we're just sitting on cash again because it's too risky right now based on the cycles.
Right. So we have millennials diving into the markets in record droves. Things like Robinhood are really making it very easy. Record participation in the stock market, and if the market goes to 5,000, there's going to be a world of hurt for these new entrants into the market. So What do you make of that? And how is that going to fare for these people who are just getting into the market for the first time and having this explosive experience?
Well, first of all, let's not forget the bond market is much bigger than the stock market, and soon rates are going up. So people who bought bonds and they get 1.5%, or they're still buying bonds because there was a bull market for 35 years, they don't even realize markets can go down. That is going to be more destruction of capital than the stock market, because that won't come back anymore. And if some inflation picks up, you're going to be negative on your rate of return. So that is more worrisome even than the stock market. For the rest, what can I tell you? I tell them in the 1990s the Dow was at 5,000. The world looked okay. It's not that the world is going under. It will be a normal behavior. Now, I've been saying that for the last couple of years based on my system. It looks strange. Now maybe we have an idea because of the virus why we could go to 5,000. Could be a war, could be anything happening. Could be that Biden wins and he overrules everything that Trump did, and the market doesn't like it, because I don't see people taking consideration that Trump might lose, which I think is very negative for the market. And then we have the situation which I talked about based on my cycles of sociology, that there's a 60 years social unrest cycle. And there was the 60s, and now 60 years later, the whole thing starts again, and people don't know how too fast it can destroy the United States.
So, Charles, you mentioned going to 5,000. We saw that in the 90s, but is it equal and opposite? I mean, can the world sustain a 5,000 point Dow Jones? I mean, aren't we a lot more dependent on higher valuations? And what will that look like in the economy if all of a sudden valuations get decimated? You know, does that trickle through to bankruptcies and so many things that need to get flushed out based on very high valuations? I mean, you talked about the bond market. I mean, what's this going to do to retirements if we have 5,000 points on the Dow Jones and, you know, record or tons of people retiring and this plan on the future valuation? So anyways, what are your thoughts on that?
Well, I can talk a lot about Europe because retirement here is already in a difficult situation, because according to law, the pension funds here have to be like 70% in bonds. And the bonds here, European bonds, give you like 0%. So you can count very simple that there's not going to be a buyer power. There's not going to be consumers in a couple of years because they cannot pay the pensions anymore. That's only based on the 0% interest rates, and not even talking about the stock market going down. So already here we talk about people not getting their pensions or getting half of their pensions. It's a big problem everywhere. And that's the result of what the Fed did, lowering rates. You know, there is what I call a super cycle that started like in 1870 after the Berlin crash. And it did more after the 1929 crash. And the Fed has decided then that we don't want any depression. We keep things going. So they keep things going and going until they have now zero interest rates and nobody knows what to do anymore. It wouldn't be better if they would just have let things develop like they had developed. So we had some crises that were manageable in the last 100 years, but they didn't want it. So now something that's not going to be manageable.
Yeah. So any instinct on what you expect to happen in tech stocks? I mean, we really saw tech stocks benefit in this COVID crisis. They got bigger as a percentage of the overall equity market. And, you know, seeing this massive crash that we're expecting here, the 5,000 point call here, what do you suspect will happen in tech stocks? Are they going to still fare better than most other ones? Or do you expect a larger amount of air to be released out of the bubble that's been forming in the tech stocks, if you believe there to be in a bubble?
Well, first of all, we talk about 4 or 5 stocks. It does the same thing as Tesla. I mean, these days, people buy these stocks and buy Tesla because tomorrow is going to be higher. I don't think anybody has an underpinning why Tesla should go up. I think it's up 40, 50% in the last 3 days. I tell you honestly, the work I do is mostly on indices. When does the market go up? How high does it go up? When does it go down? And I don't think I'm clever enough to find those stocks that would still be okay when the whole market crashes down. So I don't try to be that smart.
Charles, I appreciate that, the transparency, right? Where do you suppose the flight to safety is going to be when we're in this crash?
Well, we've been long in gold since 2011. Now it's a bit late. I'm looking for a correction. We're now today we're at 1810. I think we started at 1400, 1450. Long-term investors can stay in because the cycle is up for the next couple of years. But people who are getting afraid, and I just want to mention what usually happens is then people say, well, I'm in there for the long run. But then it goes down $100, okay, $150, I'm for the long run. But once it goes down $200, they sell, and the emotional hurt. And then when I say let's buy, they don't get the bounce again. So it's difficult to be for the long run. So what we do is we have the cycles and we have the price target, so we can tell exactly how high the gold price will go, how low it will go. We do it on interest rates, we do it on currencies. For instance, now we're looking for a better euro currency. So there are all kinds of ways investing. We do the crude oil. It doesn't have to be in stocks. If you have a wider horizon and you look a little bit what we do and you read some books, then you can make a nice rate of return even if you're not in stocks.
What does the world, not the world, the stock market look like after we see 5,000 points? Is it this long, unsustained, this long recovery back to where we're at? Do we V-shape back, or do we flatline for a while? What does your research say on that?
Well, if you do an overlay, what happened in Japan that topped, I don't remember, I think over 40,000 in the 80s, it came down, and since then it doesn't do much. I think what's going to happen is we're going to bottom, and then for a couple of years, we'll just go sideways until, things are fixed, and then maybe we start a new rally. I just want to mention how overbought this market is, because if people open an account these days, the broker says, you know what, let's be in stock because they go up 7-8% a year. You probably heard that. Now that's based on the fact that if you go from the 1900s and you draw a line with an angle of 7-8%, it goes up 7-8%. The problem is right now is that you're 45% above the 8%. So in order to get back to the 8% average of the last 100 years, you have to go down 50% below it. So people have no understanding what is expensive, what not expensive.
So on a macro level, Charles, what do you suppose is going to happen to capital? I mean, is the U.S. still going to be where the capital flows as we go into this crash, or is there going to be a shifting of wealth globally that is pivotal, really changes where and how the world is structured economically?
Well, in the early 1900s, there was the genius Kondrachev in Russia. They killed him because he said capitalism is going to conquer communism. And we have the Kondrachev cycle, and he showed that every so many years, it is very long term, a new continent takes over. And I wrote a couple of years, Europe is already down. The East, Singapore, India, China, Taiwan, Australia is going to be the leading one. And the United States is going down. That's why it's so interesting to see how it really happens and why they're so much in a hurry to destroy that country. So you see it happen in front of your eyes, how they're going to destroy the country. I told people to order the book, maybe you know that, by George Orwell, 1984. And he writes about the thought police. There's a thought police that tells you how to think. And he says, well, when you think words, it has to do with emotions. So if you don't allow people to speak those words, they don't feel the emotions anymore. And then the second thing he says, and it's very interesting, is that in that situation, they destroy history, because then nobody can compare what actually is the truth and what not the truth. So you only listen to your leaders. What they say is correct. So I have no opinion of who is right and who is wrong in the United States, but you see exactly what he wrote. They're destroying the history, and you're not allowed to think in a certain way. So we're going down very fast.
Yeah. And it's a very sad thing when you see it that way. When we're not on this upward trajectory, the only thing that is a saving grace is technology seems to be on this hyperbolic trend. I mean, the more technology we have, the more efficient things can be, and the more we can efficiently contain the standard of living that otherwise costed the country much more 10 and 20 and 30 years ago. So I guess that's the only saving grace is hopefully technology catches up to the mess that the world is dealing with.
Well, Plato, Plato, and was a pupil of Socrates. He already wrote, the problem is that the innovation doesn't keep track with the moral wisdom of the population. And that's the problem. Also here, it doesn't, it goes too fast for developing the moral wisdom of the population. So it's only going to lead to trouble. It's interesting. You see what happened to this internet. Slowly, we see all the negative influences of the internet. I hear, again, I'm not an expert. I hear all these stories about Facebook. Now Facebook has to censor what they can show and what they cannot show. So that starts to be very interesting. Television is going to tell you what you can hear and see. Facebook has to tell you what you can hear and see. If not, the advertisements are going to stop. There's a very negative point in all these developments.
Yeah. And it's just interesting to see how quickly we've become a state-run big government, this 1984 world, in a blink of an eye. I mean, you can't even walk outside now without wearing a mask, and people maybe ratting you out or backstabbing you or monitoring you. I mean, this is not the free country. It was such an odd dynamic celebrating the 4th of July this year in a world that just did not feel free, dealing with extreme economic problems, social divides of races, and then obviously this health crisis that's going on. It's just a twilight zone. And so maybe some thoughts on that, Charles, as we kind of wrap up this interview here.
Well, it's not my expertise, but in the old days, if somebody would misbehave against you, you would tell your brother, your mother, 4 or 5 people. Now you put it on Facebook, you got 5, 6 people that say it happened to me also. They make a lot of noise. You don't know how big that group is, and they influence the whole society. I don't know how that's going to end. Nobody really knows about all groups that have their voice out there, how big they are. But everybody seems to be very much appeasing everybody. And sitting in Amsterdam, I'm just at awe how this will continue in the United States. So that was my answer to what's the United States going to be. I don't see the future of a country like that, where you cannot say and think anymore what's true and what's not true. You have to be politically correct. Then you think politically correct. Then you feel politically correct. I see it all in my cycles. I see what happens. If you understand more about it, go to charlesnenner.com. You have a free subscription, and then you have a little more insight how you can approach markets and all these problems in the world.
Definitely do that, guys. charlesnenner.com. Charles, thank you so much for coming on the show with us and sharing your research, your insights, and just having this transparent conversation about where the world is at the moment. So thank you so much.
You're welcome.